Hey, good morning, good evening, based on where you are. My name is Varun and I lead marketing here at Rocketlane. I would like to welcome you all to today's webinar, Setting Up the Right KPIs to Drive Healthy Margins in PS. While there are more folks who are joining in, let me just quickly touch upon the housekeeping items. This webinar is getting recorded, and you will get the recording maybe in a day or two, which you can then watch it at your own leisure and also share with your colleagues. Now, we want to make this webinar really engaging. So, to your right, you can see the chat option. Use the chat option to interact and engage with the speaker. You can also engage with your fellow participants. Also, if you have any questions for us, feel free to use the Q&A tab. So, we'll wait for another minute for more folks to join in, and then we'll start with the webinar. In the meanwhile, let's check out if the chat option works for you. So if you can just type in from where you're joining this webinar, that would be great. So I, for one, it's fairly late here. I'm taking this webinar from India, and our guest for today, Amelia, she is from the US. So coming back to the topic today, I mean, the profit margins as a concept, it was always there. It is, and it will always be very integral to PS orgs. But today, more and more teams are scrutinizing their ROI on every dollar spent. Teams are becoming more nimble. They're expected to be mindful of how they're spending their time, and whatever work they do, it should all create an impact. So, joining me today is someone who is no stranger to this. We have Emilia Dianzica from Growth Molecules. So, Emilia is a good friend of ours, and I had this privilege of working with Emilia and also her team for the past events as well. So, Emilia was a speaker at Propel uh, in its inaugural year. Then we had Sabina and Annie who participated last year, and I'm sure, based on my past experiences with Emilia, this is going to be a great session. Welcome, Emilia. Can we have Emilia on the stage, please?
Thank you for having me, Varun. Really excited to be here about a topic that I'm passionate about. And I was thrown in many years into professional services without any real training or metrics driven thought. And it was painful. And so today, what I'd like to talk to you about is setting up the right key performance indicators. So I'll quickly introduce myself and then we'll do a little bit of nerding out on business margins. What do they mean? How do you define them? And then how can PS leaders really influence those margins? If you're leading a team of professional service managers, it is your responsibility not only to influence, but really inspire. And then we'll just talk about setting them up and give you an example of a dashboard to see what these could potentially look like in your own organization. All right, so the end goal today is it's probably why you joined. It was the very first sentence. And I always like to start with the end goal in mind. And that's really how do you improve margins and then address issues. If you're in professional services, it's an incredibly stressful job. You every single day are not only responsible for margins, but also scaling, putting in a system, and then, of course, being that front end person, not only for your team, but for your customers who are expecting you to deliver on time. So a little bit about me. I mentioned I'm in San Francisco, California today. I actually live in the mountains in Sonoma, but I always love coming to the city when I have the opportunity. I've been in tech for over 20 years in Silicon Valley. I've worked all over the world, including in Tel Aviv. I know we have Victor on the call from there. I've worked in Europe, in India, where Varun is today, and predominantly in Silicon Valley. Today, I lead a customer success consulting firm. We are global as well. And what's really been important for us is to put in an approach and a system, which I'll share with you today, and I've used at many other companies, that has allowed us to really understand our own margins. Being a consultant and delivering services is really hard. There can be low profit margins. And so really using a data approach to professional services is incredibly important. So before we get any further, I would love for Varun to go to the next slide and share a poll with all of you. I'd love to learn a little bit more about you.
Launching the poll now.
All right.
Is the poll visible?
I am not seeing it. But if oh, Meredith can see it, great. Maybe I'll be able to see the results. So we'll just give you a moment to answer the poll. All right, a couple more seconds and let's share the results. Let's see who's in the room today. All right, so the majority of you do have KPIs. Well, that's fantastic. So you'll have to share your best practices as well, given you're leveraging KPIs today in your organization. And let's go to the next slide. Thank you for sharing. So today we'll first start with the business margins, and really it's what's incredibly important when it comes to margins is they have to be healthy, right? And they have to represent the percentage of profit a company makes from its total sales after deducting all of the costs associated to producing your product or delivering your service. And profit margins are really important because they're essential indicators for your company's health and operational efficiency. And if you're not able to provide this, especially to your investors, the chances of getting additional investment or support for any new initiatives you have will be slim. So there are three types of margins we'll dive into. And the first is gross profit margin. Too many people quickly jump into net. And I argue that's a mistake, because if you don't focus on first the gross profit, you're missing the important information around the leaky bucket, right? You can be adding a lot more services to mask the problems if you're not starting with gross profit margins. So it is really the core of your business activities, and it really shows how much revenue is left after your cost of goods sold. How much are they spending, for example, on everything that it takes to make your product? And if you're a consultant and you're in professional services, everything that goes into training your team, creating the services, offerings, for example, the learning management system, whatever it may be. So, for example, we have an example here. If a company's revenue is $1 million, its cost of goods are $500,000, then the gross profit is $500,000 or 50%. And so this is a very simple example, but if you can really get this, then you're on your way to better understanding. And it's great if you're using this, but you really want to make sure that your team understands it as well. And that's really one of the largest challenges I see with companies, is they're not taking the time to explain these metrics to their own teams. So next slide. All right, so the operating profit margin is slightly different, and it's really important to understand as well. So it really not only considers the direct costs, but also the operating expenses. So the lights, right? Rent, salaries. If you have consultants and they're not salaried and they're hourly, how much is that in terms of what happens when you have overtime? How are you formulating that? So here is the table. Hopefully it's not new to you if you are in professional services, but if you're just diving into professional services, it's really important that you're able to show the operating profit margin. Obviously, you can't do this alone. We'll talk about who's going to help you in a moment. But then just below that, there's an example. And we'll dive into the net profit margin next. So this is really what your board looks at, and NRR, net profit margin. This is I feel like it's overshadowed all of the other metrics that are really important and we'll look at as well. So it really assesses the overall profitability of your company, taxes, interest, non-operational costs. The formula is very simple. So net profit divided by revenue times 100. And so it just takes out everything, gross profit, which we just went over, and removing all of the other things like operating expenses, taxes, and other ones that might be hidden. Next slide. All right, we got through the math. Had to at least show that before we got to what I'm more passionate about, the human side. So next slide, you will see how do you influence them. It's great if you can do the math. You've got the spreadsheets. You've now moved into a platform. If your companies realize spreadsheets are making everyone's crazy, and they might have moved into something like Rocketlane, that you really have to look at what are the strengths that you have. If math isn't your strength, you better have someone on your team, like an analyst, who can help you really analyze this data, look for outliers. And then your team, what are the strengths that you have, and your team, where are their weaknesses, right? Where are their weaknesses, not only on your team that you need to level up, but within your profit margin. For example, where are the leaky buckets? And if you're looking at gross, then you're able to identify those weaknesses. The next you want to look at are the opportunities. So there are weaknesses, which every single organization has. It's important to take time to reflect, to identify those outliers or those opportunities that you may be able to address quickly. And then what are the longer term opportunities that you may need more financing for and may need to go to the board for? And last but not least, perhaps this is my favorite one, because not enough people look at risks, and there's nothing more frustrating when we're doing an assessment for an organization and we always start with the SWOT analysis and we ask, where are the risks, or who are your competitors? And when a company says we don't have competitors, I have to hold back and I want to educate them and say, yes, you do. Something like a spreadsheet or a homegrown or doing nothing at all is your competitor. And really successful companies, in their financial reports every single quarter, will name their competitors. A good example of that, if you ever, and I remember my MBA finance professor making us do this, we had to go find financial reports and identify exactly this, a SWOT analysis and the threats. Companies like Salesforce will always identify who the competitors are, and they're essentially considered a threat. So really important to start with this when you're driving healthy margins. Yes, and without, like I mentioned, without undertaking this, you're really guessing. And we all know, especially with AI today and all the data that's available at our fingertips, that it's a non-negotiable. Having a SWOT analysis and really bringing your team into it is important. Next slide. All right, so how can you influence, your margins while optimizing utilization? How do you do that? You make sure you conduct in-depth project planning. I always argued, and I feel like I had this ingrained when I went and got PMP certified, is you need to plan and prepare. And if you do that and you spend 80% of your time really planning and preparing, putting in the right processes, the right systems, then 20% is executing, because your team will be set up for success. The best example of this is Well, maybe you can put in the chat if any of you are watching The Bear on Hulu right now. It is a very addictive series that I've become addicted to because I grew up in a restaurant, in a pizzeria. I see Tim here saying yes. And just knowing how much work it goes into setting up a restaurant. When the doors open, the execution is so much better if you've done the proper planning and you see the main protagonist in The Bear when he gets locked in the freezer. He didn't plan to fix the door properly, and then suddenly on opening night, he's stuck in a freezer. So making sure that you optimize utilization really starts with conducting in-depth project planning and understanding how are we going to optimize utilization. Well, we have to start with planning first. Next is managing the scope of work. Well, people argue with me when we're putting these processes in place for them, our professional services organization. How do we manage scope? We haven't done this before. Let's start with a baseline. In a few slides from now, I will show you some baselines that you can get started with. And then based on your organization, how equipped they are, how trained they are, how mature your organization will determine managing your scope of work and where there's opportunities and levers to improve. Next is pricing strategies. This takes you back to the SWOT analysis. You really want to make sure you understand your competitive landscape, right? If you put out a pricing strategy with really understanding the competitive landscape, even for people who say, oh, we're just using spreadsheets, for example. All right, well, what is your pricing strategy? How are you going to have cue cards, for example, for your sales team to really be able to sell your services as a value add? We hosted an event last week, and someone in the audience said, ABCs are gone, always be closing, but rather, especially in SaaS, you want to be thinking about always be adding value. So that's my new slogan. I've thrown out the ABCs when it comes to pricing strategies. If you have value that you can add, I would way rather be the most expensive product in the room and know that people understand with our pricing, we're going to give you best in class services. Next slide. Yes, cost control. This really, you really need to work with your CFO to make sure that things like cost control are really understood, and where can you control. If you see rising costs in a particular thing, if, for example, you're in the house building industry, what has gone up 3x? I know because I'm in the middle of my own reconstruction project in Sonoma County, and over the past few years with COVID and all the fires we've had, everything's gone up 3x. So if I'm suddenly paying more for wood, then you want to make sure that where can I cost control in other places. And then it might be increasing or improving your product, because as we're seeing, even cost of labor is going up tremendously. And then client selection. I put this on here because I think it's really important that you work with your sales team in professional services to ensure that you have a deal desk or an organization or a partner in sales that is going to make sure, is this the right client? Are we going to be able to deliver on time what they're asking for? And if we're not, making sure that you call in your head of professional services, potentially you, if so many of you today answered that you have KPIs, you're leading with KPIs. So really important to make sure that you're working with your sales team when it comes to client selection. All right, so setting up, tracking, and boosting margins. Last, but I feel really important part of what we'd like to accomplish today with our end goal. Okay, so the KPIs, and feel free to add yours, what you're measuring, but really it depends, right? When everyone says, all right, well, what are my KPIs? Where do we start? It depends on what industry are you in? How big are you? How mature are you? What's your customer life cycle? Is it monthly? Is it annual subscription? Is it a one-time delivery? Even on our own organization, even though we're a services organization and someone may buy 6 weeks of training academy for their customer success team, because we track every single service that we deliver, coincidentally in Rocketlane, we are able to confidently say that 82% of our clients won't just buy training, or they won't just buy a playbook or an assessment or a customer success platform or optimization project, but rather they'll buy more. So being able to say that our life cycle is not a one and done, there's opportunity for expansion if you do a good job, is incredibly important. For KPIs, I don't know how many of you are focused very closely on EBITDA, or if you leave that to your finance team. EBITDA, for a lot of people, it makes their head hurt. But I put it on here because so many companies, as they're becoming more sophisticated with their data, are really asking professional services leaders to look at this as well. Next. All right, so benchmarks. I know that someone would inevitably ask me this. The benchmarks, I already explained what gross profit margin, operating, and then net profit margin mean. And then EBITDA, I just introduced just in case any of you are tracking it. But your KPIs, typically this is the range, right? If you can get to these type of gross profit margins as a benchmark to start. And again, depending on your industry, your size, will determine what it is that's right for you. And I'll just use construction because I'm so interested in these kind of things, and asking and drilling my contractor, well, what is your net profit margin? And he looked at me and there was silence. And I said, no, Zach, I want to know. I'm giving a webinar on this. And he said, well, after all said and done, it's probably going to be 10% because the wages are so high in Sonoma County, and things like all of besides the labor, all of the overhead, the now suddenly increasing taxes in our county, at the end of the day, I'm taking 10% above anything I'm charging you. So it really depends on what industry you're in. I would say for something like advertising, I know because my husband is in advertising, they're always, being KPI'd, whatever you want to call it, challenged, bonus, whatever, between 35 and 45%. So again, the range is wide, and that's why I put this here. Some things that people don't think about, and this is when I argue, all right, it's great, you're looking at all these numbers, but if you're making a 50% margin, but you're losing your customers, you don't have that 85 to 100% renewal, or 100 plus, which boards are now looking at. 115 plus is what the new number is. It's because you probably have a low net promoter, customer satisfaction score, or employee satisfaction score. And I put employee satisfaction score here because if you have constant turnover in your employees in professional services, your profit margins are going to dive. Just thinking about how long does it take for your team to become really proficient in your product, and be able to deliver projects on time. You need time to train them, right? Just like in sales, the first month it might be a draw, or there is no you're not hitting on the draw for the first 1 to 3 months because you're training them. It's the same thing for professional services. So it's really important to keep a pulse on the employee satisfaction score. And then market share, revenue growth, All of these things are being influenced right now, but with what's happening in the economy. Uh, Example, we all know what happened with COVID. And then even this year with this massive swing in the economy, how many layoffs there have been, all of these things are influencing your profit margins and even revenue growth. This morning, Google posted massive uh, increase in revenue share. Suddenly, all the stocks are going up. Those kind of things will drive things like market share and how people are thinking about professional services. Next slide. All right, so who do you want to have in your corner when you're setting up KPIs that your organization will approve and support you with when it comes to things like people, processes, and systems? It has to be with your C-suite, right? You have to be able to influence them, make sure that they're going to be able to understand what you're forecasting, what you're asking for. And then next is your cross-functional colleagues. So if you're heading up professional services, you want to make sure your leader in sales, product, operations, and customer success, especially, are on your side. So that constant buy-in, not only cross-functionally, but your team. If they don't understand the metrics or what's in it for me, there's absolutely no way they're going to help you achieve those KPIs. Or the fourth quadrant is your customers. So these are the four stakeholders. All too often, I see stakeholders in setting up margins and the customer's nowhere on the page. And I think, well, if your customer is not on board, how can you hit your KPIs, right? You want to keep a pulse on that. And that's when it really important to have that cross-functional agreement with sales and customer success, because once your team is finished with professional services, you're not going to hold on to them. They're going to another organization. What happens then? Next is processes. Once you understand who your best friends are in helping you set up your KPIs, you want to make sure with that SWOT analysis, you've done your gap analysis, you've explained it, you have your people on board with where their gaps, how do we get to the KPIs that you've set forth. Setting KPIs that everyone's going to achieve, I don't believe that is the right strategy. You always want to have a couple stretch goals. What happens if we get to those stretch goals? I've been in organizations where stretch goals were put in front of me and I thought, oh my God, I'm never going to be able to achieve this. How am I going to? And I worked so hard quarter after quarter, and every time the rewards got bigger. And I truly believe that looking at the gap analysis and then putting some stretch goals in place for your organization can be highly motivating. Next slide is change management. Great, you have a gap analysis, you understand the challenges, you want to put some stretch goals in place. But if you don't put change management processes in place, you're going to fail. Billions of dollars are lost in change management because it's done poorly. It's a huge industry. We do a lot of workshops on change management because companies are realizing, wow, if we don't get this right, we are going to lose a lot of money. So you want to make sure you have a change management program in place. It typically takes at least 6 times of telling people and having them practice and understanding what's in it for me before they'll accept the change or new KPIs you've put in front of them. Next is educating. So really making sure you educate in advance of the change of putting in these margins, and then afterwards, right, during having open office hours, incredibly important during scaling anything like KPIs for your professional service organization. And last but not least is enablement. So making sure whether they go through real-time training, in your product training, through webinars, through in application, it's really important that you enable your team not only on the new processes, the new systems, but also your customers. So, for example, when we were rolling out Rocketlane to our own organization, we wanted our customers to use it. So we put their logo up. We started training them and required it in advance that we want to make sure you understand what you're looking at so that there aren't a lot of questions as we're going through this life cycle of implementing an assessment or a playbook, that you really understand what you're looking at in terms of milestones. Next. Last, management is in systems. You can only work in spreadsheets for so long before you start becoming truly inefficient. And then mistakes start happening. People can't be held accountable. And being able to look at a holistic view with integrations from different systems, inputs, that you're able to get a more central source of truth can be incredibly powerful. Next is accessibility. I just shared with you an example of actually inviting our customers right into Rocketlane so that they're able to see for themselves where are we in the project without having to Slack or ask someone, but actually just get in there, access their own documents, and really understand where it is they're going. Next. Reportable, of course. If you can't report on your content and what it is you're doing, your margins, what key performance indicators are aligning with your company's North Star, then it's really difficult to be a leader who people trust and that they feel like they can hold accountable as she's got this or he's got this. I can look at like a dashboard or a report as to where we are and where we need to get to. And last but not least is actionable, right? So you may not have the best KPIs in place right now, but being able to say, look, these are the gaps. Here are the immediate changes we're doing. Here are the changes we're making in the next 6 months or 3 months. And then here's the long-term vision and how it aligns with our North Star is important. You want to make sure that when you're looking at actions that you start with bite size. So when we, at a previous organization as a chief customer officer, when we agreed as a C-suite, what was the North Star, we got our goals for the year approved by the board and then by each quarter, really breaking it down for the team so they don't feel completely overwhelmed. And then actionable every single week. So in very agile organizations where you stand up for 15 minutes every morning and explain, here are the actions I took yesterday. Here's what's blocking me right now that I need your help, leader. I need you to remove this block. And then here are my goals for today. And being able to align them leading up to Friday can be incredibly rewarding, not only for each individual because they have a piece, but also for the person that is removing the blocker, right? You're enabling your team to move forward. So these are just some of the strategies that I would recommend. Really start with the SWOT analysis, then look at your people, your processes and systems. Get the people behind you that you need, and that's your stakeholders, to ensure that you're able to really move forward. I have one last slide for you. Varun, I'll let you speak to it, but I will just share from my own experience. Our company is 3 years old come this August, and for the first 12 months, we were really running by spreadsheet. We didn't have a CRM or anything in place, and it was really hard not only to remember, but when we were thinking about what do we want to really do more of, where are our customers wanting to buy more of, it was really hard to tell. And so this is where we not only invested in technology, but then we actually hired someone to look at what was everyone doing across our organization as professional service managers, but also where is there opportunity to improve and how long is each project taking? Why? Where's that gap? And then how do we get to a place where we can actually scale and better serve our customers? So I'll pause there. I know I've said a lot, but Varun, if there's anything you want to add before we take any questions.
Right. Thanks, Emilia, firstly. I'll just take a couple of minutes. Talking about systems here, they say a man is only good as his tools. So if you're using siloed tools, say Certinia for project accounting, Asana or Monday for project management, Google for collaboration, you are destined for inefficiencies because of the siloed nature. So that's why we came up with Rocketlane. It's a one stop modern PSA platform which intuitively handles project management, resource management, time tracking, and financials. So on the screen, basically, you see two screenshots, right? So one which gives you like a portfolio level view of how things are doing in your org, and the other one is a project level view. So this dashboard is completely customizable, but for the sake of example, it clearly encapsulates the revenue that you have made, the cost you have incurred, and the margin you are about to make at micro and macro level. And basically, this system should be more reflective in nature. So, for example, we have a report that gives you the time taken between hitting different milestones. So, right from kickoff, say, to go live. So that's like a reflective way on understanding how the processes are and how you can change and tweak them so as to benefit your org. So that's about Rocketlane. If you're interested in knowing more about Rocketlane, you see there's a button to the top right corner which you can click and you can book a meeting with us. Uh, Please go ahead and do that, and we'll be more than happy to show how Rocketlane can add value to your org, to your business.
All right, so I do see some questions. I'll answer them. And then, of course, if you want to connect with me on LinkedIn, I'm constantly posting my experiences about working with clients all over the world. I promise I keep their names quiet unless they ask me to share it or they give me approval. But always love talking to people. So happy to connect if you'd like to. And if we want to stop sharing, I'll be happy to answer your question. So Victor, you asked me, do you measure time to value or CSAT as KPIs? I would argue both. If we tell a customer it's going to take 4 to 6 weeks, we are going to hold them accountable. So during our kickoff for any professional services project we do, we let them know here's what we're responsible for, what we agreed to into the statement of work, but here's what we need from you as inputs, how much time we think it's going to take you. Are you willing to commit to this? And then when we're looking at the project plan, which we do every week, we have a 30-minute huddle on typically on Tuesdays with the client. And then on Fridays, we always send a report showing exactly what was accomplished. And if we feel that there's scope creep, we're going to have a meeting right away to address it. And if there is a lag on their end, delivering what we need to get to time to value. So we agree up front, what does time to value look like? And is it in 4 weeks or 6 weeks? And then what's happening if there's a delay on your end? And then we do CSAT often, every single week. We will ask for feedback, especially if you're going through our academy programs. Every person who is going through that academy class gets a question around their experience. What do they want more of and less of? And then if it's not good, we immediately address it. So I wouldn't pick one or the other. I would use both in terms of KPI. Hopefully that answers. Next, since CS teams often own professional services, how do you balance the one time? I would say you call it out as separate, just like in, any other organization I've worked in operations, for example, you look at that separately. So when I was at Bright Edge, we had professional services organization. They did something very specific, and I was running operations there, did training for onboarding and customer success managers. When do you call in professional services to do out of scope work? And then that is definitely forecasted and looked at separately. And when you're showing that to a board, it's definitely a different line item because it's a one time, you're right, it's a one time. Unless you're selling professional services and they've kept you on a retainer for X number of hours for ongoing. They sign a 1-year agreement. That's a very different model. But for one time, yes, I agree. It's a different line item on your financial reports. So how do you recommend pricing your managed services? That's Daniel, that's such a big question. I think it's really important to dive deeper on doing a SWOT analysis. Again, how are you currently pricing? And then how are you in comparison to other organizations? I argue if there's a lot of onboarding up front that you need to do with your clients, then you will likely want to consider an onboarding flat fee, which you were asking about. um, I really like packages as well. Companies, if you do some A/B testing, for example, a lot of companies don't want to deal with like nickel and diming or line items. They just want a package. They want to know exactly what they're getting. For example, when we implement customer success platforms, we give them packages. Here's A, B, or C. And then if you want anything outside of that, that's charged hourly and a lot more expensive than if you do a package. So we've done some A/B testing before we got to that, but we find the majority of clients will pick the one in the middle. If they're really short staffed, they'll pick the full services. We want a fractional leader, playbooks, assessment, training, everything, because we're just growing at a massive speed and we don't have time to do all of this, but we need it. So I always say do some A/B testing, do your SWOT analysis, look at your competitors, and then test it out. And anything that I've shared today, you should definitely be reflecting on every single quarter and understanding what did we do really well? Let's celebrate it. What can we learn from? Let's improve it. And that includes pricing.
Emilia, I have a follow-up question to Daniel's question. So, would you recommend tracking time even if you're going with a fixed or flat charge or a flat pricing model? So, do you still recommend that we should track time on the activities that the team members are doing?
Yeah, because it's a cost, right? It's a cost to your organization, regardless of what you're doing. I mean, with AI right now, I think companies are really looking at what can we automate, especially tedious tasks. Like anything that you can automate, you should be really looking at so that your professional services team, your customer success managers can be really focused on adding continuous value versus the more automated things that can be done in a system. And you're reducing opportunities for error, right? So you have far fewer errors if you're able to automate.
Got it. Makes sense. Next
All
question we
right.
have from Natasha.
Yes. So you mentioned ESAT. One of the biggest challenges is burnout. Absolutely. Task switching. Yeah. Right. So best guidance I have found for burnout when we were really growing at a previous organization where they brought me in heavily reduced staffed. This was a large organization. I think they had like 60,000 customers. It was an app, and burnout was definitely uh, something that was becoming very evident. Doing simple things like meeting with your team every single morning and looking at the dashboard and giving everyone an opportunity to talk. Now, you may have a large team. So, if you have a large team and you have directors reporting into you, have them do it within their own groups. It doesn't mean a formal meeting, it means standing up around where they're working or jumping on a Zoom and timing it 15 minutes, right? Let's have 15 minutes. Let's go through everything. I think that's really important. And then analyzing the data, where are they getting burnt out? I believe that people who feel overwhelmed by task switching haven't been trained on time management. If you think of the average executive, they have hundreds of emails coming in. Their LinkedIn is blowing up with messages of people trying to sell them things. If they have children or family, they've got all of that. Right before we jumped on this call, as Varun and I were testing, my 12-year-old was calling me with her horse. There was some emergency in her world. It was an emergency, and I had to stop everything and focus on that. And so it's really important that you're taking time to teach your teams time management. I coach people all the time on this. Who cares if you've got 100 emails coming in and your Slack messages are blowing up? Prioritize, write down the top 3 things you've committed to today and prioritize those 3 things. And then put everything else below that, right? I think it's incredibly important. Even Slack, being super crystal clear, writing focus time. And people, if they see that and they still choose to bother you, that means it's urgent. And that starts with enablement. One of the slides I talked about was enabling. It means teaching your team time management, probably one of the number one courses besides emotional intelligence that we teach our clients. But giving them permission to say, you know what, I need an hour to focus on this. If anyone slacks me, it's muted because I'm behind on this project. I'm stressed out. And if your team gets stressed out, this is human nature. It's like a deer in the headlights. I can't move. For anyone who's had a bad dream and you can't move in your dream, that's what your team feels like during burnout. So you really want to make sure that you call a timeout, let people speak, create a safe space for them to speak. Don't punish them for it. And then teach them time management, how to identify what's okay and how to really focus. The best technique that we teach, at least, is the Pomodoro technique. An hour might be too much focus time for someone because there's this thing called the cell phone that is constantly distracting you and it's rewiring our brains. Teach them how to do 15 minutes of focus time. You'll be amazed at how good it feels to work for 15 minutes and be accomplished.
Cool. Nice. I hope that answers your question, Natasha. And with that, Amelia, I think we have covered all the questions. No new questions here. So thank you so much, attendees. Great questions, brilliant, equally brilliant answers. Amelia, any parting thoughts on profit margins for the audience?
Yeah, I would say the number one thing is making sure that you feel confident with the numbers and really understanding what they mean for your organization. Don't be afraid to go to your CFO. If that person's too busy to talk to you, make sure you ask them for a resource on their team. They have access to systems that will be able to quickly give you this information. Too often, professional services leaders are guessing, and there doesn't have to be that way, right? If you have the data and you're able to speak to it intelligently, you'll be able to influence not only the leadership above you, but your team, right? They'll have something to look forward to work towards. And then make sure you celebrate those wins. It's incredibly rewarding when you take the time out to celebrate their hard work.
Well said. Indeed, we should definitely celebrate our wins. So with that, I think we can call it a day. No new questions, Amelia. Thank you all. Thank you everyone for attending this webinar. And of course, special thank you to Amelia for taking the time out. It is always a pleasure to work with you, Amelia. Till next time, take care. Bye bye, and we'll catch up with you
Bye,
soon.
everyone.